Hey guys, welcome back to another video. In this video, I'm going to be talking about the recent earnings announcement that came out for Salesforce in their first quarter of 2022. We can see that this week when they announced earnings, their stock price shot up from 163 all the way up to 184 by about 10% in 1 week. But over the last year, they're still down pretty substantially from their highs of about $300 per share to what is now about $184 per share. So judging by this, they could currently present a good buying opportunity from a value investing perspective. And so in this video, I'm just going to go over their earnings and then also figure out what the intrinsic value per share of Salesforce is, so that we could figure out if at the current price it does in fact present a good buying opportunity. So thanks in advance for leaving a like on this video, and let's get right into it. So for those watching this video who might not know, Salesforce basically just creates technology that helps connect companies with their customers. They offer a bunch of different business solutions that service the Salesforce. Salesforce is literally a name, but they service the Salesforce of different companies, as well as helping with marketing and distribution and things like that, mainly through solutions that involve the cloud, blockchain, and artificial intelligence to help just connecting customers with companies in the digital world. And right here we have their earnings, and we can see this is their income statement right here for the first quarter of 2022, and they're comparing that to the first quarter of 2021, so year-over-year results here. And we can see that their two main operating segments are subscription and support, and then professional services. And from their subscription revenue, they produced about $6.8 billion of their total $7.4 billion for the first quarter of 2022. This is up 24% year over year from $5.9 billion in 2021. And then also, if I scroll down here, we can see their gross profit margin is pretty high. About $5.3 billion of their $7.4 billion was gross profit. But if I scroll down here, we can see their net income is extremely low. It's only about $28 million, so that's definitely not that impressive compared to what their total revenues were. So that is something that Salesforce is looking to improve upon in the future. And we can also see that their earnings per share came out to be about 3 cents per share, which is down from 51 cents per share in the first quarter of 2021. Then also, if I scroll down here, they break down their income statement by percentage. We can see by percentage of revenues here, and they have the total revenues, that's 100% obviously. We can see their gross profit margin is 72%, but then their net income is not even 1%, it's less than 1%, down from 8% in the first quarter of 2021. Then right here we see their balance sheet, and we can see that for this balance sheet, they're comparing the first quarter of 2022 to the last quarter of 2021, which ended January 31st, 2022. And we can see that their total assets right now come out to be about $93 billion, but a lot of that is made up of goodwill, which is essentially just the difference between how much a company pays to acquire another company versus the actual value of that company's assets, the actual book value. So that could be a bit of a warning sign, considering that obviously if they want to be able to meet their debt obligations in the future, then they're going to want to rely on their assets to do that. But if most of their assets are held in goodwill, which is essentially just exactly what it sounds, it's just like basically a business saying that this is what we think our acquisition is worth potentially maybe in the future. So that's really not that good of a thing to see that a large percentage of their assets is made up of goodwill, but time will tell to see if that ends up negatively impacting their business in the future. We can see also between their total liabilities and total equity, total is obviously $93 billion, and then total stockholders' equity comes out to be about $58.8 billion. So the majority of their business is financed by equity, which is obviously, in the case of Salesforce, probably a good thing considering the fact that most of their assets are made up of goodwill. So they're focusing more on financing their business through equity, so they're not going to be paying interest payments as much in the future, which is good because, as I said, it's going to be kind of hard to meet their debt obligations if most of their assets are sitting in goodwill. And lastly, we have the consolidated statement of cash flows. We can see that for the first quarter of 2022 that the net cash provided by operating activities came out to be about $3.68 billion, which is up 14% year over year from the first quarter of 2021. And also, if we scroll down here, we can see that they invested a lot more money in 2022 as opposed to 2021. And that mainly came from purchases of marketable securities. And then also from financing activities, we can see that they had a net cash inflow from their financing activities, mainly as a result of proceeds from employee stock plans. And then the net increase in cash and cash equivalents was about $1.3 billion up to $6.8 billion. And something else that's kind of interesting to touch on is that obviously earlier we saw that in their income statement that their earnings per share was only about 3 cents per share, which is extremely low. But if I scroll down here, we can see that they actually did a comparison between their GAAP earnings per share and their non-GAAP earnings per share. GAAP obviously being generally accepted accounting principles. That's the main regulation that all companies have to abide by when they're reporting their financial statements. But if we see their non-GAAP net income here, they basically just reduced or increased their net income by just adjusting it slightly based on some of these one-time expenses that they don't think are really reflective of the growth of their business. And if we look at the non-GAAP net income, which is what the investors mainly looked at, which is why this giant jump in the stock price occurred, we can see that the GAAP net income came out to be $28 million, but the non-GAAP net income was $982 million, which is still down from $1.1 billion in the first quarter of 2021, but it's obviously a substantial increase in comparison to the $28 million of net profit, which didn't even come out to be a 1% profit margin. And that mainly came from the fact that they added back some amortization of intangibles as well as some one-time stock-based compensation expenses that really ate into their operating income or operating profit margin, which ended up eating into their net profit margin. But when they added those values back, their non-GAAP net income showed that their business did produce a pretty good amount of net income, barring these one-time expenses here. And next, what I want to do is the intrinsic value analysis, just to figure out the intrinsic value per share of Salesforce. And we can see right here that I got all these metrics from Yahoo Finance, and we can see Yahoo Finance is basically estimating that for the next 5 years, Salesforce is going to grow at about 18% compounded annually. And taking into consideration a couple of other metrics, like the fact that they have about 990 shares outstanding, they have about $6 billion of free cash flow for 2021, and they're currently sitting on about $880 million of debt on their balance sheet. We can see that the intrinsic value per share is estimated to be about $138 per share, with a 30% margin of safety of 96 and a 50% margin of safety of 69, which compared to their current share price means that they are currently trading at slightly above Yahoo Finance's estimated intrinsic value per share if we wanted to get a 10% return buying in at this price based on these metrics right here. So that means that despite the fact that Salesforce is down pretty substantially from their highs in 2021, it could mean that they're still a little bit expensive based on their current cash flow estimates that they have in their business. But on top of that, I think something else that gives us a good look at the intrinsic value of Salesforce is just comparing them to the rest of the industry. And we can see their two main competitors are Oracle and Microsoft. And compared to Oracle and Microsoft, we can see that Salesforce, they're not doing that bad in terms of gross profit margin. They're staying around the same with Oracle at 76%, Microsoft at 68%, Salesforce at 73%. But we can see that when we get lower down the income statement that Salesforce really starts to struggle here a lot in comparison to the rest of the industry. We can see they have a net profit margin of about 5.45% for the annual report that they reported last for the year of 2021. And Oracle's was 33.96%, Microsoft was 36%. And then on top of that, return on assets for Salesforce is also pretty low, sitting at about 1.79%. So not only are they not taking as much profit away from their business as Oracle and Microsoft, but on top of that, they're also not using their assets as efficiently to get a return on their business in comparison to Oracle and Microsoft. So it's definitely something to look out for. I think the fact that Salesforce, in comparison to their main competitors here, aren't really outperforming, and on top of the fact that their business is currently priced at above our estimated intrinsic value per share here, could mean that Salesforce might be expensive still and that there might be other better opportunities in the market at the moment. But obviously investors were pretty happy based on the financial future outlook for Salesforce. So I guess time will tell to see if Salesforce presents a good investment long term. But I'd love to know what everyone watching the video thinks. Is anyone investing in Salesforce right now? Let me know in the comment section down below. Leave a like on the video, subscribe to the channel, and I'll see everyone in the next one.